Hi, this is Chen here from Invisible Investor. In this video, I want to share with you why we as a retail investor shouldn't be following the buy and sell alert from the fund managers. We shouldn't be following the fund managers from reading the news. And there are many reasons for it. But for this particular example, I want to use Cathie Wood as an example. Whether it is George Soros or whether it is Warren Buffett or whether it's Cathie Woods, it doesn't matter. But regardless of which fund managers, we shouldn't be following them entirely or blindly. So who exactly is Cathie Woods, right? Cathie Woods is the founder and CEO and CIO of the Ark-Invest. And Ark-Invest is an asset management company that have about $50 billion asset under its management, and it manages several ARK ETF funds such as the ARK Innovation, ARK Genomics, ARK Next Generation. I think there's one ARK Fintech, and there are several others, small ARK ETF as well. What makes the Ark-Invest ETF different from the other ETF is the normal ETF are passively managed. For example, most ETF track a certain underlying assets. They track an indexes, they track a certain sector, or they track certain underlying assets. But ARK ETF is a bit different. ARK ETF is actively managed, which means the fund managers actually handpick the stocks to be included in that particular ETF within the ETF framework. However, what makes Cathie Wood famous is in year 2020, I remember I read an article around January 2021, I read something like in year 2020, out of the 10 top performing ETF in the US, I think 4 out of 10 of it are from the ARK family. For example, in year 2020, the ARK Innovation ETF grew by 153%, the ARK Genomics ETF grew by 189%, the ARK Next Generation ETF grew up by 160%. That's totally amazing results, and I have good respect for Cathie Woods and her performance and the deep research that she has done on all these emerging tech company. However, we shouldn't be following Cathie Woods blindly, and the reason is this. There are 3 reasons for it, and the number 1 reason is we don't have all the time in the world as a retail investors. We have work, we have family, we have members, we have everything to do, right? And investment is not probably for you, not one of your day-to-day job that you do on a day-to-day basis, and we don't have all the time. And Cathie Woods itself is a professional fund manager, so she eat, sleep and breathe investing, right? So she can have many transactions that we as a retail investor couldn't. For example, if you look at the ARK ETF, this one is the ARK Fintech, ARKF, and all the top shareholdings. If you look at just one example, for example in Square itself, right? One of the company is Square, and this shows the buy and sell of the company, the share Square by ARK Fintech. And you can see here that in February 24th, they bought a little bit, 97,000 shares. February 25th, they buy another 38,000 shares. Then in April, they will sell off 41,000 shares. April 16, they sell 25,000 shares. To April 27, they sell 110 shares. And May 13, it changed back and they will buy back 26,000 shares. May 17, they bought back a little bit. And then in August, they start selling it back again. So, for example, for all of us, we couldn't be buying and selling all these shares and so often, we don't have all the time in the world. And the second reason is the timeliness of this information. For example, if you look at this article itself, Cathie Woods keep dumping Chinese stocks as Beijing crackdown. The superstar fund managers used to have big stake in China. As a regulator tightens rules for various industries, she's getting out. And this article is dated on July 27. Just imagine if you are an investor and you read this article, you'll be panicking and you'll be selling on July 27 or July 28, right? And guess what? Let's see. And one of these, of course, this big company, that big stake that he has in China, actually is talking about Tencent, because ARK Fintech actually owns Tencent. And let's look back at ARK shareholding. You can see here the Square, Shopify, Zillow, Coinbase, and one of them is Tencent, because Cathie Wood actually invested in Tencent. If you look at Tencent shareholdings over here, these are all the transactions. But what I want to point out is the blue line is actually the shares that Cathie Wood bought on an accumulated basis. You can see Cathie Wood have a peak holding when the share price is around $90 US. This is Tencent's share price listed as an ADR in US, and the article came out around this which is 27th of July and 27th of July, and this is where Cathie Wood disposed of close to 629 shares. July 26. Cathie Wood disposed of close to 629 Tencent shares on July 26, and July 27 the article came out. But guess what? On March, Cathie Wood have sold 122 Tencent shares. On March 26, Cathie Wood have sold 44,000 Tencent shares, and before that, on March 25th, he has sold 75,000 shares. To February 25th, Cathie Wood sold 192,000 Tencent shares. 24th, he sold 70,000, and so on and so forth. And you can see by the time you read this news itself, actually the Tencent have a higher shareholding, about 2.2 million shares of Tencent around February 2021, and she has been selling the shares in a small chunk around here, and finally the bigger chunk around here. By the time the news came out on the 27th, they have sold their shares from about 2 million to about 870, remaining shares about 870, which is about almost 1.3 million shares was sold. There's almost more than 61% of its shareholdings have already been fully sold off. But guess what? One is even more weird is upon selling the shares, which they sold on at 56, like around this time frame, like February, like on 16th of August, the shareholding they continue to sell on the 16th or 17th of August, and then a week later he bought back the shares. You can see from here, on August 16, Cathie Wood decided to sell 171,000 shares on August 16. On August 25th, he decided to buy back 200,000 shares. So just think about it. The first is, as a retail investor, we do not have the time to monitor the first thing on the buy and sell, because there are so many transactions. And the second thing, when the fund manager sells the shares, they don't sell the shares, a huge chunk of shares. In order to maintain the price, the fund managers actually have to sell off the shares slowly. They have to dispose of slowly, especially if you are famous investors. If you are Cathie Wood, or if you are George Soros, or you are Warren Buffett, so everyone is tracking your funds trading activities. So if you are selling a lot more shares than is required, the public will get panicked and they will continue to sell their shares. So you won't get to sell at a high price. So if you want to exit a position, you need to exit at a slow manner. And that's exactly what Cathie Wood has been doing for China shares. He has been exiting around this area before the price continued to go down. But it's also kind of very weird because just a week later, a bearish sentiment become a bullish back. July 27th, they were saying Cathie Wood was selling all the stocks in China on July 27th. A month later, it's suddenly become bullish back, and Cathie Wood is buying back into Chinese stocks. So, if you are an investor and you have been invested in Tencent, for example, and you have sold on around this area, I can tell you as an investor, you won't be able to buy it back, because you would have lost all your money. If you heard this news, you bought around here and you sell it around here and ask you to buy it back, you probably won't do it, because you won't buy back at a price that is higher than your selling price. The number 3 reason is the percentage shareholdings. Whenever we read something like this, we thought that the fund manager is bullish, but how bullish is bullish? How many percentage of its entire shareholdings actually used to buy these shares? So if you look at here, if you look at Cathie Wood right now, Cathie Wood actually have a very, very small holding in China stocks. If you look at Tencent right now, it only have about less than 1.32% in this particular ETF, right? If we have investors and we follow blindly what Cathie Wood did, we would have bought probably maybe 5% or 10% of Tencent, but Cathie Wood only have 1.3% of Tencent, which I see it as a relatively small positions. So why am I telling you all this, right? I'm not trying to tell you just to say how bad Cathie Wood is, not really like that. I respect every investors, and they have their predetermined entry and exit. Of course, she did wonderfully well in year 2020. And it's time will tell whether in years to come whether she will outperform the indexes. And of course, we cannot judge Cathie Wood performance this year alone, because Cathie Wood, I believe her fund time frame is around 5 years time horizon. So that is another thing to consider, right? We shouldn't be judging performance of a fund at one particular year, because it is a 5 years time horizon. So does it mean that whatever Cathie Wood does, whatever the fund managers does, has no value to us as a retail investors? No, not at all, right? Actually, we can use that as an investment ideas. Everything that we hear or see or read, I think all of them are investment ideas. But the main thing is we need to exercise our own independent judgment, own independent thinking, and own independent research. Or we can leverage on their research as well, in terms of the data point and the rationale and so on and so forth. At the same time, we need to have the right strategy that work for us, that actually suit our own investing style and with proper risk management. So the 3 reasons not to follow the fund managers blindly, because the first is we don't have all the time in the world. The second is the timeliness, and the third is different in allocation per share, the percentage shareholdings. So I wish you all the best, and I'll see you in my next video. Thank you very much. If you benefited from this video so far, a small favor to ask from you is please help me like this video, or click the share button here, or subscribe to my YouTube channel so we can help empower more individuals with financial education.